Hey everyone, welcome. My name is Jack Statza, Senior Principal here with the AI Fund at Alumni Ventures, and you all are all here for a webinar on investing in AI, startups to watch, and 10 key questions to assess them. I'm going to start before we begin with some housekeeping items. You'll be on mute and off camera the entire presentation. There are links in the side panel for those who would like to read ahead. You can submit questions through the chat in the GoToWebinar panel, or you can email us at investor.relations@av.vc. We will be following up with everyone who submits questions soon after the presentation, and we'll be sharing a recording of this with you all via email. As we get started, I must pause and remind everyone, we're speaking today about Alumni Ventures and our views of the associated investing landscape. This presentation is for informational purposes only and is not an offer to buy or sell securities, which are only made pursuant to the formal offering documents for the fund. Please review important disclosures in the materials provided for the meeting. So with that, I'd like to hand off to Ray Wu, our managing partner, who will go over the agenda. Ray?
Thanks, Jack. Thanks everyone for joining us. I'm the managing partner for Alumni Ventures AI Fund. I'm based in Silicon Valley. I was an entrepreneur in the first part of my career. Then I was in corporate ventures for almost a decade. Initially with Cisco, leading software investments, merger acquisition. Then I ran HP Ventures for about 4 years. I helped to build several cross-border funds between Asia and the US, focusing on AI, SaaS, and infrastructure services. I got my EMBA degree from both UC Berkeley and Columbia. For today's webinar, we're going to go through a quick overview of Alumni Ventures. Then we'll jump into Q&A with our panel. Next slide, please. In terms of venture investment as an asset class, it has outperformed the public market for the last 5, 15, and 25 years, based on Cambridge Associates reports, and is largely uncorrelated with the public market. In today's environment where startups stay private longer, including well-known names such as SpaceX, Stripe, Epic, there is more value being created in the private markets compared to a decade ago. Next slide. Alumni Ventures is the largest and most active venture firms for individual investors in the US. We're ranked #1 in the US and #3 globally based on PitchBook's data. Since 2014, we have raised more than $1.2 billion and have more than 1,100 portfolio companies. We have a large investment teams of more than 50 people in 6 offices, covering top US regions, such as Silicon Valley, New York, Boston, Chicago, and Austin. We're a very disciplined venture firm, and the results speak for themselves. Next slide, please. Our fund, our annual and semi-annual vintage fund that we fundraise and deploy into 15 to 20 companies within 12 to 18 months, diversified by stage, region, and lead investors. We co-invest with well-established VCs with sector expertise and leverage their due diligence and term sheets while running our own disciplined process. We typically reserve 20 to 25% from each fund for follow-up investment to existing portfolio companies. We also provide opportunities to our investors to syndicate into appealing startups where we can get enough allocation. Next slide, please. As we all know, AI is one of the most defining technology trends for this decade. It combines evolution in computing, networking, and storage with data and analytics tools to create a powerful intelligence system that feels like magic. When we talk about data as the new oil, Andrew Ng, the former head and the co-founder of Google Brain, talked AI as the new electricity. CEO of Google goes one step further, highlighting that AI have a more profound impact on humanity than fire, electricity, and internet. We definitely think so, and that's why we have a dedicated AI fund to focus on the sector. I want to be brief and don't want to take too much time away from our panel discussion. You can read more about Alumni Ventures on our website, and please reach out to us about our fund. Let me pass the ball to Jack to share more exciting portfolio companies and start the panel discussion. Jack.
Thanks, Ray. So just briefly, I'm just gonna highlight some of the breadth of AI investments Alumni Ventures has made in the past. So starting in the first column here, Data Miner, which is AI for real-time high-impact event and emerging risk detection. On the second column here, AvaBot is an AI assistant that makes cold email outreach more personalized. On the third column, Spice AI is making blockchain data more ingestible for AI applications. And then in the last column, Xanadu is building quantum computers, which could train AI models in an instant. So that's just an idea of the breadth and scope that Alumni Ventures has access to in terms of AI investments. With that, I'll give a quick brief introduction of myself, and then I'll ask the panel to come on. So as I alluded to, I'm Jack Statz, a senior principal in the AI fund. I've spent over 7 years in venture capital, 2+ years at Alumni, and about 5 years at Allstate investing in AI companies for that enterprise. So with that, I'd like to invite Rashmi, James, and Jay on camera to start the panel discussion, and I'll ask each panelist to start off by providing an intro and a background of themselves. So how about we start with you there, Jay?
Great. Hi, Jack. Hi, everyone. My name is Jay Allardyce. So I'm the general manager for data analytics at Insight Software. So we are all about the office of the CFO. It's a private equity company that's been an amalgamation of a number of acquisitions backed by TA, HG, and a few others. Previous to that was at Google and led a number of our solution engineering efforts around data analytics and AI, as we kind of brought solutions to 10 customers. Before that, had some time at a few industrial startup efforts, both GE and Uptake, and then some time where I know Ray back at HP and HP Software.
Great. Rashmi, would you like to go?
Yeah, happy to. Hi, everyone. I'm Rashmi Gopinath. I'm a general partner at B Capital. We're a growth stage equity firm. I've been at B Capital for about 4 years now. I lead our enterprise software investing practice, cover a number of areas. In addition to AI, also invest across cloud infrastructure, cyber, DevOps, and application software. Prior to B Capital, I was at M12, which is Microsoft's venture fund. Worked with James during my time there. Was at M12 for a little over 4 years, and prior to that was at Intel Capital. Spent the first half of my career in operating roles, both at large companies and startups. Engineer by training, built products for Oracle and for GE Healthcare, and was at 2 startups. One was a cloud infrastructure startup called Blue Data, where I ran a number of go-to-market teams. The company got acquired by HPE, and then was at a NoSQL database startup in the Valley called Couchbase, where I ran the global business development team, and the IPO'd a few years back. Really excited to be on this panel.
Thanks, Rashmi. Happy to have you. And James, would you like to go?
Sure. Hi, everyone. I'm a partner at M12, which, like Rashmi said, is Microsoft's venture fund. Good to be on this panel with my old boss. But at M12, I cover infrastructure software broadly, which includes security, data, and AI infrastructure. Prior to that, I was at FTV Capital, which is a fintech-focused venture fund, but ironically only did infrastructure software there as well. But I started my career as an investment banker at Jefferies. Good to be here.
Great. So how we're going to kick this off, I'll ask a few questions. I'll be directed to the panel as a whole. Feel free to chime in if it makes sense for you and share your thoughts. We're hoping this becomes more of a discussion for these first 3 questions. So the first one to the panel would be, what are some AI startups that you're excited about? Either they could be portfolio companies of yours or ones that you've worked with in the past. Feel free to jump in, any of you.
Happy to kick it off. I mean, we've been investing in AI for a really long time. Have invested in a number of companies, both across the AI infrastructure stack as well as on the AI application layer. On the infra stack, some of the investments that we've made include companies like DataRobot that provides democratization platform for building AI models without necessarily requiring the technical expertise to be able to do that. We have another investment in a company called Labelbox that provides not just the automated product-led data annotation for AI training data sets, but they've also recently launched a platform for training and fine-tuning, aligning large language models, doing model comparison and testing and fine-tuning these integrations with the leading LLM solutions that exist out there. And then on the applied AI side, we have a number of companies that leverage both AI and generative AI for a number of use cases. We have a company called Innovator that leverages over 60 million of patient records and applies AI solutions into building vertical applications for healthcare customers. We have 3 companies in the revenue tech stack. These include companies like Sixth Sense in the account-based marketing space, Clary in the revenue forecasting space, and HighSpot in the sales enablement space that all leverage AI to help drive more insights for sales organizations to be more productive, as well as to leverage the data insights to be able to predict revenue growth, revenue forecasting, which leads are most likely to convert. And then we have companies like Pendo that leverage AI, and they've recently launched their Gen AI products, which are specifically targeted for product management use cases. So a number of investments in and around this space. We're in the midst of also closing a Gen AI infrastructure investment in a company that provides specialized GPU cloud compute capacity for users that are looking to leverage Gen AI. So really excited about the space in general, which hopefully reflects in the investments we've made.
Thanks, Rashmi. It sounds like you're very active in the space. Jay or James, do you have any to jump in here? Otherwise, I'll go to the next question.
Sure. I mean, I think you guys touched on it pretty clearly, which is data is new oil or data is new fuel, or whatever you want to call it. I actually spent a lot of time looking at how data operations are being changed with LLMs. I think everyone's thinking about how good quality data can change the accuracy or the performance of LLMs, but how can LLMs then in turn process and transform data? So we just led an investment in a company called unstructured.io. You know, it's clear that 80% of an enterprise's data is unstructured, but in the past, it's been very costly and inefficient to deal with this unstructured data. Now, going back to your point, like when data is the new fuel or the new oil, how do you tap into what we call idle data? And so unstructured data in the past has been idle. So that's our point of view. I mean, we still think about, I call it big data to small data. I think I need some help on the marketing front, but there's definitely some validity to that, whereby it's no longer about just how much data you have, but it's about the quality of the data you have. So if there are any startups focusing on that point or that theme, we'd love to chat.
Yeah, maybe just building on James's point. So one thing I didn't mention in the introduction, I've got the opportunity of, we co-founded the largest generative AI group that's sitting on LinkedIn, and started to build a company around that, giving startups kind of a voice, because we know there's so much noise in this market. And so not started as a classic investor per se, but we have been starting to monitor a number of inbound opportunities. Two to highlight, I think one is Turmeric. They're very early, and they're establishing guardrails around the deployment of large language models, as you would think of very much similar to a CI/CD pipeline for code and code release. Think of that for large language models. Are you injecting that into applications and having the security and sign off of that? So very interesting as a way to approach into an existing framework. The second is Wand AI, disclosure and advisor to the company, but the opportunity here really is kind of redefining how AI and analytics come together, from being able to proactively bring predictive analytics around the data management space, but apply that with not only purpose-built large language models and or using ones that are out there in the public today, but really focused on use cases. So helping enterprises transform and have that co-pilot for an enterprise-based view, is very interesting. And so a little bit, James, to your point of like trying to go from large data to small data or more impactful data to a use case-based problem, that's an interesting one as well. So again, not necessarily in the investment capacity just yet, but we're seeing a lot of inbounds that are very interesting.
Thank you, Jay. All right, moving to the next question for the panel. In the context of AI startups, and this is like a multi-point part question, so feel free to pick and choose your point you want to enter in it. In the context of AI startups, what are some key considerations for investors when conducting investment due diligence? How do investors differentiate between genuine AI innovation and superficial applications? And what impact do factors like regulatory changes have on investment decisions? So a few parts in there. Feel free to jump in on whichever one comes to mind first.
Happy to kick it off. So in terms of, I would say, I mean, the key parts that we look at on the diligence side, I think there's a lot of similarities in Gen AI that we criteria that we look at in assessing other companies from an investment standpoint. People, product, and process is always, I would say, top of mind. On the people side, specifically for generative AI, what we look for is the folks that have subject matter expertise and have the ability to build differentiated and credible technology in this space. It depends on where in the stack these companies are getting built in. So for example, one of the companies that I mentioned that we're looking at in the specialized GPU cloud space, so folks that have prior expertise in building machine learning or AI applications, and the rest of the exec team that has prior experience coming in from the silicon semiconductor space to be able to build technology in this space. What we see on the foundational model layers side is as well, people that have deep expertise. Usually this is a team that comes out of companies like a Google, like a Microsoft, like a Meta, that are trying to build these foundational layers. And then on the application layer side, it's folks that typically come with some subject matter expertise or a point of view in those industries or sectors that they're building these technologies in. The second, tying into the product, I think that's definitely a key criteria as we diligence companies in this space, is looking for companies that have true IP or true moat. There's definitely a lot of hype and noise in this space, and I would say the most common approach that we see a lot of companies take is to kind of build a wrapper or an API around a foundational model to address a specific use case. Those for us become, I would say, a little difficult to get excited about, primarily because there isn't a lot of differentiation that can sustain itself over a period of time. And we've seen that with some of the larger tech incumbents like a Microsoft or Salesforce offering their own Gen AI solutions, which then eliminates the need for a specific startup that's addressing a very specific thing without really having either the contextual models that differentiate themselves or having access to proprietary data. And then the third, on the process side, really a lot of focus on the business model and the monetization approach, which again has been challenging, to be honest, in the Gen AI space, where a lot of companies are still pre-revenue. There hasn't been a lot of thought being put into what the pricing model and what the monetization approach will look like. But that's something that we spend time in, especially given that the focus has been on the growth side, in terms of what is going to be the pricing approach, and is that sufficient enough to cover for the COGS, which we know based on the compute requirements, the access to GPUs can be pretty expensive. And so trying to identify the right pricing model that will help justify the right gross margins and operating margins for the business on a long-term sustainable path. And tying into the regulatory framework, companies that are especially building in areas where there has been or there will be more regulatory oversight, ensuring that companies have the right framework to bring those into effect. For example, if you're selling into healthcare or financial services, how do you ensure that data privacy and security concerns are appropriately addressed? Or if it's a company that's more in the foundational space, how do you ensure that the data that the models are getting trained on are the right data sets that they should have access to, or ones that are not copyrighted, because we're seeing a lot of issues come up in terms of the requirements on getting more explainability both on the model, but as well as on the data that these models are getting trained on. So a lot of work being done on the diligence front to ensure that the companies that we end up investing in are ones that will be able to sustain themselves as market leaders in the coming years.
Thank you, Rashmi, for hitting every part of that big question. Does anyone else want to jump in?
Yeah, I can cover a little bit from our end as well. On one hand, I think AI startups is, from an evaluation perspective, very similar to how we evaluate other startups. We mainly look at founders and team experience, track records. We look at technologies, unique innovations, including patent portfolios, intellectual properties. We also look at the unique differentiation and market potential around, especially competitive landscape. Doesn't matter if it's data strategies, language models, domain expertise. Since we're also co-investor, we spend time to look at the dynamics around the funding and work closely with the lead and co-investors, have the expertise to help us together assess the opportunity. For example, Rashi mentioned the deal on the generative AI GPU cloud. We just joined her on that deal, so we're happy to work on deals together. Having said that, AI startups tend to be different as well, because AI presents a fundamental change. In our mind, similar to dot-coms and mobile evolution, where a startup can't just survive with just having an internet presence or mobile app. A startup really need to solve a real problem and have a real competitive differentiation. So as a startup in AI, we look at whether it is approaching from an AI first perspective versus retrofit. Due to the current AI buzz, I think that is something that we become very interesting to watch. If you see a lot of companies rename themselves AI, and then you see there's a buzz here. We spend more time with the team to really understand their vision, understand what has changed due to AI, and especially why the solution is the best, right? So because there's so many companies talk about the same story. A lot is just understand landscape and have it full coverage. Regulation is always tricky in this new early stage, especially when you think about what can happen. I think there's a lot of opportunities to shape the industries. Certain areas make sense from a guideline perspective, such as algorithm discrimination, data privacies, data visibilities, system visibilities, right? But the tricky part right now is how to put that into an implementation that does not hinder creativities and our competitiveness in a global scale. I think there's a lot of room for startups. We just need to be mindful and watch it over time.
Yeah, I'll just add a couple points to it. So a lot of the inbound that we see in some of the coaching that our team has helped to give to companies is really focus on the outcome. And the point of this being is that domain expertise, the clarity of use case, and having that experience, because right now you see an absolute swath of companies that just refer themselves as the chatbot. I think it's actually the biggest disservice you can do. Because it has a connotation to every experience you have on a website today, and to a common individual, they might just see that that's exactly what you provide. Rather, be pointed in the experience of understanding the domain, understanding the industry, and also thinking about, too, especially in the generative AI space, where this is a redefinition, reimagining of knowledge management, right? So one just illustrative company in that is Ivy.ai, that has found a way to go in higher ed. To reinvent that experience now for students and families or otherwise, and it's making that navigation of data much more easy, much more intuitive and personalized, right? But do they come off as talking about the AI company? No, you're talking about the outcome, the experience to the industry. That to me hasn't changed in any point of investing or operating with companies. And second is the absolute understanding of data at scale, because we've all said before that AI is only good as the data that it has access to. And so being very clear about that sort of data environment, data fabric, how it fits within an existing environment, has absolutely been just a critical thing to understand, even if they have that scalability. The third point I'll say is, with the fact that so many can go out there today, which I think is great, to take on a GPT model, a large language model that is public, and start to build a wrapper around that. I think it's good in terms of getting started, obviously, to get to market, to understand, refine it. But to Rashmi's point, like, what core foundational capability are you bringing to reinvent or define how this experience actually works that is sticky? Because any one of those large players, it can be a complete shift in the market. And if they're offering cloud-based services, it's easy to offer just AI-based services into existing contracts. So what is that uniqueness that you do bring that makes that relevant and sticky, or just a few things?
Thanks, Jay. So the last question to the panel, I know a few of you have already hit on some, but it's about red flags with AI startups that will typically turn you away. I know Rashmi was highlighting the wrapper over like an API call into an LLM, maybe an experienced team. Are there any other red flags you're noticing that are unique to AI startups in the market?
I would say one is not having the understanding of data privacy to your domain, and the framework of which you operate within. So much of that has been maybe not having an understanding of where data sharing and data availability is in a cloud-based environment, or the management of third-party data that might enrich that model. Right? Having to have a good understanding of that, because we're just at a phase right now where you're having to educate the market and educate potential buyers, and that natural fear is there. It's not any different than where we were when we started with cloud. Right? People had very clear concerns of, well, someone else is managing my data, and we had to build that education. So I think we'll get there, but that to me is a flag if you can't understand and articulate that in the context of what it means to that end customer.
Yeah, I think that's a good point. In fact, one of the things that we're doing a lot more of during diligence is, I think there's a huge disconnect in Gen AI between investor market fit and product market fit. I think investors are jumping onto the next shiny object, but a lot of times we spend time talking to budget holders, buyers, enterprise users. And to Jay's point, one of the things that they think about is data security. And so when a startup comes into a pitch or starts talking about, hey, my model is the most accurate, or I have the most cost efficiency. But when asked, like, hey, how are you gonna deal with the data, or how are you gonna capture the enterprise data to train your models? If they don't have a good, succinct answer to exactly how they're going to do data capture, data transformation, but also ultimately secure that data, that's usually a red flag that they haven't even thought about it, and they've very much sunk in a lot of cost in GPU and compute without really battle testing their theory. So that's something that I do start looking for.
I think a couple from our side. One is build and they will come kind of a mindset where it's Gen AI for the sake of Gen AI without really having a actual pain point that would drive enterprises or companies to actually pay for a product. It seems like every company is now jumping into using Gen AI in the marketing message. But again, the question is, like, do you really need Gen AI for this kind of a use case? That's definitely one area. And the second, I would say, given all the craziness that we saw with OpenAI, board governance and control in terms of how the executive team or the core founding team will get measured. I think that's a key one that we're all paying a lot more attention to now.
Yeah, I agree with all the points. One last piece is that we kind of watch a little bit because AI is so powerful that it actually can create a lot of different things. People can jump into different opportunities. We're a little bit cautious when there's a DNA mismatch between the team and opportunity. The B2B and B2C tend to be require different founders and team DNA to a certain degree. We have not seen too many startups that can easily cross that boundary. So we just want to make sure that team is aligned with this go-to-market strategy. So in many ways, it's the match of the team and the opportunities and also the technology they have. I just want to add that point.
Yeah, the other one maybe just to put a point on. So in my current role and focus at Insight, we're focused on application solutions for the office of the CFO. And one of the clear bets of why I joined was we can reimagine that experience with AI or more predictive insights to help CFOs run their business more efficiently. And so if you're a startup that is doing finance AI, something in that space, think mindfully about the incumbency, right? Because it's easier in many ways to have the incumbent reimagine their workflow because they have customers and they already have in some ways that data moat. And if you're new in that space, but yet you have an AI-based solution, be clear on how it's unique and different. It might be finding a wedge that in this case we may not be paying attention to. So I think there's a bit of a balance too of just that adoption because given to Rash's point, we have an opportunity to adopt this in almost any software product that exists today. So why is your AI-based startup something that is finding a wedge that just isn't served as a part of the market itself?
Thanks, Jay. So now I'm going to go into more directed questions at each panelist individually. So Rashmi, I'm going to start with you. And I know you might have said some things that answer this question already. So without repeating yourself too much, I'm going to just jump into the question here. So you are the lead investor at B Capital for several successful data and AI companies such as DataRobot and Labelbox. What are you looking for in founders and what key questions do you tend to like to ask them?
I think some of the things we've covered already, but passion for the space, what's their story, like why are they doing this? Every founder has opportunity costs and they could all be making a lot more comfortable salaries at big companies. And so if they're jumping into this mission of building this software that or the startup that solves this particular problem, really understanding the backstory and why are they passionate to do this. The second thing that we look for in founders is around people skills and leadership, their ability to hire and retain top talent, be able to get the rest of the company excited and energized about the mission of what they're building. And that, again, is something that shows over the long run in the course of the company's journey. And then one question that's always interesting for me to understand is like, what does success look like for them? Like when they look back at their entrepreneurial journey 5 years, 7 years, 10 years from now, like what would they look back and say that made a huge difference? So kind of understanding like, what are they looking at from an end goal standpoint, I think is also helpful to understand more. And that goes into some of, I would say, the peeling back of the layers on how they define culture and what are their values and philosophies and what drives them.
Thank you, Rashmi. And playing off of that with questions for James here, can you share more about how Microsoft's venture unit M12 looks at the AI investment landscape and any key questions you're asking these AI startups?
Yeah, I mean, I think every year we start off with a few theses, and I think this year was the year of, hey, let's focus on the infrastructure layer of AI. So how do we enable developers to build more scalably, securely, interoperably? I just throw all the adjectives or adverbs at it. And so one of the key questions that we do ask is like, well, where are the developers spending their time? This could be based off open source metrics, or it could be through community surveys that we send out, just to understand like what are the developer pain points, and then through that we then subsegment our themes and theses into different areas. So I know that was a very broad answer, but in general, we split it up into data. So is there a way to automate data labeling, and or what is the next phase of model training, for example? Is it really RLHF, or is there another form factor? A good example is we just invested in a company, which I can't disclose now, that is focused on RLAIF, which is using AI models or AI agents to then train the enforcement models that are currently being trained by humans in RLHF. So that's a high level view of where we'd like to spend our time, but it is very much developer oriented.
Thanks, James. I have a second question for you, and I appreciate that first one. So when I was at Allstate, we were very strategic in our investments and reported up to C-suite. Do you see a similar balance at Microsoft? Is there a strategic alignment you have to consider when making investments, and what does that internal process look like?
Yeah, I would say we've gone through strategy shifts, but ultimately we don't have a business leader on our IC. We make independent decisions, and that's by default or by design, just because we want to combat the innovator's dilemma. We're not the type to look for things that are immediately complementary to Microsoft or things that Microsoft can acquire down the road. Our motto is, hey, we provide signal back to the mothership, yes, but ultimately we want to invest in the best companies. Sometimes those companies compete with Microsoft, which I think is, surprising to most. But the whole idea is, hey, if we think it's a good company and it does rub shoulders against Microsoft, like, hey, there's a reason why we made that investment. So, the Microsoft leaders can take it either way, which is, hey, well, I'm excited that there's another competitor there in the market, or sometimes it can be like, well, why did you invest in something competing? And that's an interesting dynamic that we need to fight through.
Thanks, James. Appreciate that. Jay, next question's directed at you. As an operator who used to lead Google Applied AI and also founding board member of one of the largest AI communities on LinkedIn, do you have any advice on how an AI startup stays ahead in this competitive landscape?
Yeah, a couple things. I mean, one of the missions of starting, what's termed GenAI.works, but it's the generative AI community on LinkedIn, was helping to realize there was a tremendous amount of noise in this market. And for many customers, early base traction obviously is getting eyeballs to the product and getting trials and seeing how people interact with it. And we kind of looked at the view because many investors are investing, in a variety of sectors. A lot of startups, just given the opportunity to, move quickly and build, may not have the same capital reserve or go-to-market strategy to get awareness. And so one of the premises that the team is built over there is really giving, the startup boost or the voice for some of these companies to get early trial and early feedback. And that matters most. Don't spend the time hiking trying to, get the investment. If you can get product and start to get some feedback very quickly, it's the best for you in that regard. And then further, it's a bit of the feedback that we can, have as a team has been providing to help some of these companies, think about their narrative and their positioning, as just given the, the swath of what we see. So, it's in many ways is getting out there quickly, trying, getting that feedback and repeat. But oftentimes you're not able to do that within your own channel because you haven't built that followership. So that's just one thing that we've really helped to help give to the startups and hopefully the community to do more great things.
Thanks, Jay. Ray, this is for you. As a seasoned investor who has gone through the internet and mobile revolutions, how do you look at the current AI wave, and what are some of the top investment themes?
I tend to find the biggest venture opportunity happens when there is significant technology disruptions. In a normal trend, there's limited opportunity for startups to win over established vendors just because they have more resources and channels. The real upside when there's a technology disruption that is non-linear and tend to break existing models. So that's why this is very exciting. For example, if you think about the current model, there is, you look at the search engine, they use advertisement models, right? But then when people move to ChatGPT interface, where information being summarized versus seeing from ads during the search process, that changed a lot from a business model perspective. So I do think there's As I go through some of these traditional, I mean, we watch through internet, watch through mobile, now with AIs, we're just very mindful of these kind of opportunities. In terms of investment themes, we're mainly looking at two type of startups. One is around AI technology startup that is truly unique offerings, AI first, whether it's language models, data insights, innovative infrastructure toolings, designed specifically for AI computation. The other is more around applied AIs, where there's a unique competitive differentiation that can benefit significantly from AI to reduce cost, enhance productivities, or customer satisfaction. So that's the two I think most of the time we spend time on. But then when you look at the trend, a lot of developing in parallel. So we're watching all these together.
Thanks, Ray. So we still have a little bit more time here. So what happened is we received over 100 questions from potential attendees that register. We've digested all these questions down into 2 questions that we think encompass a lot of what was being asked. So I'm going to present these 2 questions to the panel. Anyone can jump in. Again, we can make this a discussion. So the first one, and it might be things we've repeated, so no need to go into it all again. So first question, how are AI advancements influencing various industries, and what entrepreneurial opportunities and challenges are emerging as a result?
I'm happy to jump into it. On the opportunities, I think there's a significant amount of greenfield new opportunities that startups can realize in how AI advancements are changing different industries. I think especially for several of the laggard industries, this is a great opportunity to leverage a really quick and easy way to get up and running with AI to automate a lot of previously manually led processes, as well as to now apply data and insights into taking their business either in new areas or creating that differentiation moat against their competitors. And this applies to every aspect of the business. Our hypothesis, again, I think Ray, you've mentioned this, was that every company, every software company will become an AI company. And so the ability to leverage many of these advancements in technology and help companies get to that next phase. Cloud was a big shift or a dislocator in tech advancements. AI is absolutely one that's positioned to be that. And I think for startups, it's helping many of these industries that may not have the talent or the technical capabilities to be able to adopt these technologies, creating a simple way for these companies to be able to leverage the benefits of what AI can offer to them is quite exciting. And this is all across the stack, all the way from the ops or the middleware layer to the infrastructure layer at the very bottom to applications at the very top. I think there's a tremendous set of opportunities to explore.
I agree with that. I think in general, AI should provide, well, in theory, AI should provide more accuracy, more automation. But I think that the reality is there's still a technical gap of like preparing the data, putting it in or ingesting it and putting in real-time decisioning. There's still a slight gap, but I truly believe that this is an opportunity for entrepreneurs. But the challenge is also everyone talks about AI now. So there's definitely a hype cycle. So how do you parse through the noise? Was it through a demo? Is it through product differentiation? I think there's just a lot more noise. So when there's opportunity, there's also challenges. And I think that's one of the biggest ones, at least as an investor, as we look at thousands of companies a week. A lot of times it's hard to differentiate purely on a deck. So we like to double click on the product.
Thank you, Rashmi and James. So the second and last question from the audience here, it's around ethical considerations with AI. So how are ethical considerations such as data privacy, misinformation risks, and the reliability of AI in critical areas like healthcare and science being addressed by government, startups, and investors? Or how do you think they should be?
I always say I'm glad I'm not a politician because it's challenging for one, but I think that's something that at least Microsoft and M12 has been thinking about for a very long time. We led an investment called TruePic, and their whole thesis was, hey, there's going to be a lot more deepfake videos, altered photos in the world. So how do you combat against disinformation or misinformation? And so they created a product that can digitally sign, or almost like a watermark, any digital asset that's been captured by TruePic. That's a first step into providing some guardrails and some guarantees that whatever a consumer sees is somewhat validated and authenticated. But I think AI does open up a huge can of worms of how can AI be used maliciously, and you can't necessarily govern it with policies. There has to be some tech-enabled way to do so. And so those are the type of companies that we like to invest in. Yeah, I'll pause there.
Yeah. I mean, I'll just add, I mentioned one company early on in the conversation, Turmeric, that's providing, kind of guardrails for the deployability of large language models. What's interesting, just, to the point, not being a policymaker by any stretch here, their ability is to look at patterns that we've seen in the past of reporting financials externally, Sarbanes-Oxley, things that established controls around, public, dissemination of financial information and who had to sign off. They're taking a very similar approach to be that, third party unbiased view that, consulting firms can use as models are audited and managed. So I think from that perspective, looking at companies that are trying to shape it, from a technology lens is things we're seeing right now.
I do think there is very much across industry requirements. I think one, obviously, from a government regulation policies, but there's also need to be industry standards, best practices. I mean, we have to see how the self-regulation comes along. And then obviously with the startups and investors, I think there's responsibility in terms of looking at the models, accuracies, and I mean, we can influence the overall outcome still at this moment, with that, how to combine the industry efforts with the kind of regulative efforts along with the technology. I tend to find AI today best applied to the creative industries. Actually, a quick promo for our next webinar. We're going to do a Hollywood with AI. So from a creativity perspective, AI is great. You can go bound. Essentially, you don't have to worry about limitations. That's where it really lies. Then when it comes down to the truth, when it comes to education, when it comes down to the data, security, accuracy, when all the panel talk about, I think that's where a lot of this effort needs to come in. A lot of trainings, a lot of guardrails, boundary need to be set. So I think the industry will have this kind of evolution from certain industries will adapt first, and then over time become more trustworthy, and the enterprise will pick up different pieces along the way, and we'll see the evolution just like we see other industries before. Jack, you're muted.
Thank you, Ray. I was just saying, I think we're just over time here, and I'm going to do the closing speech here. So just as a reminder, if you had any questions that didn't get answered today, feel free to email us at investor.relations@avbc with questions, or if you want to learn more about investing in the AI fund. A special thanks to all our panelists, Jay, Rashmi, and James, and we are looking forward to seeing you at the next webinar. Thank you.
Thank you.
Thank you.